Are traditional expert calls in the investment world becoming obsolete? According to Stream, they are, and you can access primary research easily and efficiently through their platform. With Stream, you'll have the right insights at your fingertips to make the best investment decisions. They offer a vast library of over 26,000 expert transcripts powered by AI search technology. Plus, they provide competitive rates on expert call services, and you can even have an experienced buy-side analyst conduct the calls for you. But that's not all. Stream also provides the ability to engage with experts one-on-one and get your calls transcribed free of charge, all for 40% less than you would pay for 20 calls in a traditional expert network model. So if you're looking to optimize your research process and increase ROI on investment research spend, Stream has the solution for you. Head over to their website at streamrg.com to learn more. Thanks for listening, and we'll catch you next time. All right. Hello and welcome to the Yet Another Value podcast. I'm your host, Andrew Walker. If you like this podcast, it would mean a lot if you could rate, subscribe, review it wherever you're watching or listening to it. With me today, I'm excited to have on it's the third time now, my friend Artem Fokin. Artem, how's it going?
Hi, Andrew. It's nice to be back for the third time.
Hey, I appreciate you coming on. This is, I think a week ago, we did not have plans to do a third podcast yet, but appreciate you coming on quick notice. Just let me start this podcast, a quick disclaimer. Remind everyone, nothing on this podcast is investing advice. We're going to be talking about a somewhat controversial company. I think a lot of the controversy has been put to bed here, but keep in mind, investing involves risks. Neither of us are lawyers, so everyone should keep all that in mind. Anyway, we wanted to return about 2 years ago now. We did our first podcast together. That was on Burford. I recently reviewed the podcast actually for different reasons than what we're going to talk about today, but I think a lot of it holds up very, very well. The reason we're talking today is on Friday, kind of, one of those things that completely changes the company. The narrative, the story came through. Burford's giant YPF Peterson case. The judge came out with a summary judgment ruling that I believe the quote from Burford was a complete win against Argentina is what they got. If you look at the headline numbers, just in the press release that Burford put out, they said, hey, this could be $8 billion before pre-judgment interest, which could number another $8 billion. So this could be $16 billion on face value to Burford. Now, $16 billion before their share and everything, but it's a huge number. Burford is an under $3 billion market cap company. So we were talking about just ginormous numbers. The stock's had a nice run in the past week. I'm rambling on. I'll pause there. I want to ask you, you've been invested in Burford for a long time. What are your thoughts on Burford on the heels of the YPF summary judgment ruling? And we can talk about all aspects of it.
Okay, so let me start this podcast the way I start every podcast when Andrew invites me, by giving my disclaimer, which is Caro-Kann Capital LLC and or its affiliates are long Burford shares.
I'm long Burford shares as well, so I can throw that disclaimer out there too. There you go.
And also maybe long other securities that are equivalent to being long Burford shares or Burford in general. So do your own work. This is not investment advice. So with that behind, let's dive into your question. I think there are several big blocks there. So big block number one is pure YPF win on liability. And I'm happy to talk more what win on liability means, what is remaining to be still decided by the court that is here in this case, etc., etc. And that, as you said correctly, this is potentially a multi-billion-dollar win. That's block number one. Block number two, this, in my opinion, should be giving a lot of credibility to Burford business model and management team. For several years, many naysayers were saying publicly that Peterson when I say Peterson and YPF, I use them interchangeably. Technically speaking, it's not correct. YPF is a Argentina and YPF are defendants. The name of two cases, technically, one case is Peterson. This is a bigger case. And a smaller case, which is based pretty much on the same facts, is Eaton Park against Argentina and against YPF. So, but when I say YPF, I really mean those two cases combined. So I just want listeners to be clear about terminology here. So many naysayers were saying publicly that either Burford will lose those cases. And again, technically, it's not Burford would lose them because Burford technically is not a plaintiff. But again, I'm using those terminology very loosely, so be aware. Either Burford will lose those cases. That's number one. Number two, if Burford wins, they will not collect. Number three, if they win, they will win in pesos.
Yep.
And because pesos, unfortunately for people of Argentina, depreciated substantially since 2012, when the contractual breach was occurred, according to the court decision. It's currency massively devalued. So even if you win a lot of money, you will get paid in pesos that depreciated, 90% since then, 95. I don't have the chart in front of me, but it's a massive depreciation. So sure, you will get nothing. And most of those things have been so far proven, at least now, and we'll talk about the appeal risk later, incorrect. And that, I think, should be serving as a boost to Burford credibility. And then, before the narrative was, Burford will never win this case, will never get paid. And I think it's possible that the narrative could change over time to, is it possible that within Burford portfolio today, there may be another YPF? And I don't know, because we don't, first of all, we don't know their cases, all of them. We know only few, very, very few. So it's hard to speculate. Second, they may never have another YPF. It's also possible. But it's also possible that they may have. And to make sure, we're talking about here probably like a multi-bagger for Burford over those roughly 11 years.
Oh, I mean, just to add on, so we're going to talk a lot about the case today, but I think one of the things, look, a lot of people are going to look at the share price and see Burford stock went from 7 to 11 or 12 today in the past week on the heels of this news. And I think a lot of people are going to look and say they missed it. And I think the two things I would say is we'll discuss analysis, but I think the market is kind of under appreciating how much Burford's going to get from this. But the second thing is, to add on to what you said, I think this is a clearing event for Burford, not just because it puts, a lot of people didn't want to step in front of a YPF ruling, but they just won this. And to me, that is such validation of the business where, going forward, Burford always includes slides that say, hey, our IRR on our investments to date are 30 or 40% or something, right? And I think a lot of people were hesitant, and that excludes YPF. I think a lot of people were hesitant to underwrite that. But I think going forward, a lot of people are going to be looking at Burford and saying, hey, not only do they get these great, pretty consistent, uncorrelated returns, but as you said, what if there's another YPF hiding in there, right? What if they invested $2 million and, they invested, I think, in total $20 million and they got $200 million in proceeds from selling pieces of this so far, and they're going to get another billion, 2, 5, whatever it is. Like, people might start looking and say, what if the next Facebook is in there, right? Because that's kind of what they just found here. So I just think this is a clearing event, and we're going to see the market going forward giving them kind of more credit for the quality of the business, because I think this proves that out. Anyway, again, please continue.
I like your analogy very much about Facebook. The way the analogy that I've used historically is this: saying that Burford will never get another YPF, which is totally possible, is coming to a venture capital firm here in Silicon Valley and saying, listen, you will never get another Instagram, another WhatsApp, another Facebook, you name one of those successful companies. And to be true, they may not, or they may, we don't know, future will tell. One thing that I just wanted to clarify so that we're on the same page. I believe that Burford IRR, including YPF, is around 30%, 30. And excluding YPF, it's about 24, if I remember the most recent presentations correctly. I just wanted to make sure that it's not 30, 40 on the aggregate of the portfolio.
I will trust you. They throw out so many different numbers, and some of them are excluding, some of them are including. It can be kind of tough to remember what's excluding and what's including. You are probably right, but that's the 30% that's realization so far, if I remember correctly, now that I'm thinking about it. So it doesn't include just how good the remaining pieces of the YPF are. But let's talk. So summary judgment ruling comes out on Friday. Burford calls it a complete win against Argentina. Maybe just talk to the high points of why this is a complete win against Argentina. Because I actually know some people who they read it and instantly their thought was, oh, Burford kind of lost this one because there wasn't an explicit damages number listed and YPF was dismissed as a claimant. And then 20 minutes later, they read the whole thing. They're like, oh no, this is great. But just walk us through, what are the high points? Why is Burford saying this is such a complete win?
Okay, so first, I'm sure there will be some people who listen to this podcast who are Burford junkies, like you and me. So They know a lot about YPF. They know a lot about the legal rules. And I also suspect that some of you listeners may be hearing about YPF for the second time or for the first time, and they may not know some of those things. So let me just explain what summary judgment is. Sounds good?
Yep.
If two parties, plaintiff and defendant, are in court in face of the judge, and the facts, or at least some of the facts, are not being disputed. Both parties are pretty much agreeing on those facts. In that case, the judge plaintiff and defendant, both of them, can file a motion for summary judgment, saying, dear court, facts are pretty clear. This is a matter of purely interpreting the applicable law. Could you please decide this faster in a summary judgment instead of us going through the full trial?
Yep.
And that's what was happening here. Both plaintiff, Peterson and Eaton Park, and defendants, YPF and Argentina, filed motions for summary judgment saying, honorable judge, the facts are very, very clear. Could you please decide it in a fairly expedited fashion? Because the case is so complex, expedited fashion here still meant a very long time. Again, it's a complex case, and applicable law here is complex because it involves not only rules of New York law, but also law of Argentina, etc., etc. So it's a complex endeavor. And the judge issued, and also at that time, the court has an option. After analyzing the documents and testimony and everything, the court could say, I grant full summary judgment in favor of a plaintiff. Full win. Or you can say, I will grant a full summary judgment in favor of the defendant. Full win by defendant. Or it can be what is called partial summary judgment, where the judge will say, this and this and this is very clear. I'm deciding on those matters.
Yep.
However, there are some things that needs to go into trial, but the scope of the trial is massively reduced. So in this case, going back to YPF, the decision rendered on Friday, March 31st, was the following. Plaintiffs, Eaton Park and Peterson, have won against Argentina. That's done. However, they lost against YPF. So YPF, according to the summary judgment, is not using legal terminology, is off the hook. And simplifying, the issue was the following. Did the YPF have an obligation to enforce Argentina to comply with its own bylaws?
Yep.
Oversimplifying a little bit, the court said, we don't believe that the corporation whose bylaws were violated had the legal obligation to force the government of Argentina to comply with the bylaws. So YPF is off the picture. However, Argentina lost on pretty much every count, except the exact amount of damages.
Yep.
And the exact amount of damages boils down to, on the surface, very trivial issue. However, from a monetary perspective, it's not very trivial.
Yep.
And the key point here was the following. Once Argentina, the Republic of Argentina, takes control of YPF shares, not control of YPF as a company, but control of the shares. So 50% plus, 51, let's call it for the sake of simplicity. This is a trigger, according to the bylaws, to tender for the shares. As a result, that date when 51%, again, I'm simplifying the number here, is taken over, that's a critical date. And the question becomes, when did it happen? And I believe on February 12th, on April 12th, I believe, correct me if I'm wrong on this date, Argentina effectively installed its own management, who started running the company in a different way. And the plaintiffs were saying, this is the day. However, it may not be the case because there is a difference, or there may be a difference between control of the company and control of the shares. Those two different issues, potential. But then Argentinian Congress passed the law, which was called public interest law, that expropriated shares owned by Repsol, which is roughly 51%. That law was passed by May 7, and I believe it went into effect either May 9 or May 10, something like this.
The dates are definitely within several days of being correct from memory. Yes. So, and that's probably can be definitely considered as the date of acquisition of the shares. Importantly, the judge wrote in the summary judgment decision that Argentina made certain admissions in prior testimonies that mean that the latest date
the way I interpret the decision, the latest date when Argentina acquired the shares, control of the shares, is this date when the law went into effect. So the way I view it, we have a fairly narrow window of a couple of months. It's either April 12th, roughly the number I'm quoting from memory, up to May 9th. So within the time frame, this is probably the date when Argentina took control of the shares. So let me pause here.
And now, a quick word from our sponsor. Are traditional expert calls in the investment world becoming obsolete? According to Stream, they are, and you can access primary research easily and efficiently through their platform. With Stream, you'll have the right insights at your fingertips to make the best investment decisions. They offer a vast library of over 26,000 expert transcripts powered by AI search technology. Plus, they provide competitive rates on expert call services, and you can even have an experienced buy-side analyst conduct the calls for you. But that's not all. Stream also provides the ability to engage with experts one-on-one and get your calls transcribed free of charge, all for 40% less than you would pay for 20 calls in a traditional expert network model. So if you're looking to optimize your research process and increase ROI on investment research spend, Stream has the solution for you. Head over to their website at streamrg.com to learn more. Thanks for listening, and we'll catch you next time. I was just flipping through the summary judgment. Your dates are almost spot on. And then, if I'm just going to cut to the end, the difference is like people can read Burford, YPF's bylaws had a formula. When YPF IPO'd, it was not lost on anyone that Argentina had a history of nationalizing companies. YPF's bylaws had a formula that said, hey, Argentina, if you want to nationalize us, here's the formula. It's basically a multiple of net income times the highest trailing price earnings multiple over the prior 2 years, if I remember correctly. And the question is, if it happened in April, use one number that gets you to, about $10 billion in total damages. If it happened in May, you use another number that gets you to about $5 or $6 billion in total damages. So obviously these are a huge swing based on just 1 month, because what happens is the net income number, I believe YPF's filings get made in early May that reduce their net income and reduce their trailing multiple. So just a couple of days can have a massive, massive swing on value here. So that is one of the outstanding arguments, and we might come back to that. But overall, let's just continue talking about the complete win for Burford here.
So, and the judge said on this issue, I cannot make summary judgment on the date when it happened. I need more testimony. I need more arguments. I need more steps to be completed before I do that. And without that date, I cannot calculate the number of the amount of damages. And because of that, you won, Peterson and Eaton Park, but we don't know yet how much you want.
Yep.
And a couple of other minor issues, and it will be probably too much of legalese to talk about this, because Burford plaintiffs were also proposing the consequential damages as another legal theory. But it seems to me that it probably was just a backup plan if the main plan doesn't go through. It looks like main plan went through just fine. There are a couple of smaller issues, but I don't think they matter at all. So that's why I think it's a very clean win. Also, if you look at the decision, pretty much all arguments proposed by the counsel for the defendants were dismissed, including. So to me, it wasn't a surprise, because I had to do a lot of legal analysis on the currency conversion issue, because some of the very well-respected media globally will publish an article saying Burford will get paid in pesos and will not be very valuable. And they were quoting a particular legal case that on its surface, if you take it and read it, you would get scared. The problem is that they never mentioned that there is another case. And there is simplistically what happens is this. And this is pretty well-established jurisprudence in the United States. It goes probably almost 100 years back by now. Obviously, there were follow-ups, etc. But very simplistically, if there is a decision that involves a currency years back, the question is, do you convert at that time or do you convert at this time? And importantly here, the obligation to tender for YPF shares was in US dollars, because they were trading in the United States of America, in New York Stock Exchange. The legal currency here is US dollars. I'm not commenting right now on Bitcoin and other cryptocurrencies being used right now, but you cannot go to a store in the United States of America and try to buy Coke using euros. It would be illegal. So the medium of the tender must have been US dollars. And then you carry that. So again, will be too much legalese, but many people are skeptical.
Look, just to your credit, I was nervous about the pesos argument. I thought it might even be a way for the judge to kind of split the baby here. I don't think the judge, if she found the rulings of law were against Peterson and Eden Park, I'm sure she would have, but I don't think anybody wants to set the precedent where, hey, companies can nationalize their assets willy-nilly with that trade on the US stock exchange without any liability. But she could have been like, also, this might bankrupt Argentina. Maybe I do it in pesos to make it less on them. I was a little nervous about them. I specifically remember I reviewed the podcast we did 2 years ago. You were very firm. No, this is going to be in US dollars. This is coming in US dollars. And look, that was the ruling. That's what happened here.
Yeah. So that was very nice to see, definitely. And if you read the judgment, it feels to me, and to be clear, I've never worked as a US judge, so I've never written a judicial decision. I never even clerk as a clerk to a judge. So I'm interpreting this from the outside, not from the inside, obviously. But to me, if you read the decision, it's very clear that pretty much every legal argument proposed by the defendants failed on its face.
Mm-hmm.
And so, when I read it, I felt it's a very, very clean win. There wasn't like, well, on the one hand, on the other hand, and this is and that, and they're like,
yep.
Oh my God, it's going. How the judge will rule? Then you start seeing the logic, like, yes, this is where it's going, and that's what happened. So very, very clean win. So that's good. That's very, very good win.
So all right, so we've got this clean win. We do still have. We'll come back to damages and we'll come back to interest rate. Maybe we'll talk, but we've got this clean win at this point, right?
Yes.
We still need to go to actually pretty much a full trial to establish the damages. The interest rate is up in the air. I think the judge says, hey, it's probably Argentinian rate of 6 to 8%, but we need to talk about that. We've got this clean win at this point. Let's do that. Let's quickly talk about did you want to say something?
Let's just first explain a couple of things. Let's first explain, because you mentioned some numbers, like in the billions, right? Many billions of dollars. So let's just explain how the mechanics of the waterfall work. Sure. And I encourage anybody who is interested in this topic, go and read press release that Burford issued on Sunday, April 2nd. By the way, Andrew, thanks God it was not April 1st when Burford issued press release, right?
Yeah, I am with you. It is just so funny. The summary judgment comes out March 31st. Burford is very smart to put out the press release April 2nd, because there is a world where this comes out April 1st and all of us are looking like, is this a joke? Yeah, this is the weirdest securities fraud joke I've ever seen in my life. But I have the press release pulled up over here. You go ahead with the numbers and I'll kind of spot check you if anything is off or anything.
So this is what is important. So at some point, I would think that the court would issue a final decision on damages. And when you see that number, this is not the number which will be going eventually, if collected, and we'll talk about that. That's not the number that Burford is entitled to.
Yep.
So there is a fairly complex, but Burford really simplified it, waterfall of payments, where Burford eventually, from Peterson, that's a bigger case, because Peterson owned roughly 25% of the company.
Yep.
It's roughly 100 million shares, which roughly probably would be tendered somewhere between, call it 53 and 88 or something like that.
Yep.
So you need, I will skip the intermediate steps, but I believe roughly Burford will be getting the entitlement of that number. What, like 35%?
It's 35% from Peterson. And then if you want me to skip ahead, from the Eden Park claim, they get 73%.
73%. Yep. Exactly. So it's 35 and 73. So when you see at some point, I would think you will see those final numbers. You multiply one number by 35, another one by 73%. This is what Burford entitlement, and the reason why I'm saying entitlement, because it's not cash yet. Cash needs to be collected. I'm sure we'll talk about that. So that's what Burford will be getting. So, and those numbers, and I will, Andrew, you have press release in front of you. Why don't you mention what those numbers collectively convert to Burford?
Yep. So, so if the April 16th date is used, which I just consider the higher number date, Peterson would be 7.5 billion and Eden Park would be 900 million. So Burford on those numbers would be entitled to, if I'm doing the math in my head correctly, about $1.1 billion. And then if the May date is used, Peterson's 4.5, Eden Park is 550. That's a little over 5 billion in total. And Burford would be entitled to about 650 million. I'm sorry. I was deducting for my, I've got my little chart with the haircut. Sorry. On the 5.5 billion, Burford would be entitled to 1.6 billion. On the 8.5 billion, we'd be talking about 2.7, 2.8 billion is what they would be entitled to. Sorry about that, everyone.
Yeah, because I felt like the numbers were way too low.
Yeah. I've got my spreadsheet with everything listed and I was just looking at it, but I've got different face and I was deducting for the face. So those are the numbers. Yep.
Perfect. So now, everybody most likely is familiar with the concept of time value of money. $1.
You would think on this podcast, everyone would be at least.
Exactly. I would expect that. So everyone would appreciate the fact that if Argentina indeed paid the money to people, to parties involved, Peterson and YPF in 2012, that would be a very, very different than if they pay money tomorrow. The US legal system recognizes the time value of money. And there is this concept called pre-judgment interest, which means this: if Argentina needed to pay $100 to someone in 2012, but they would only do it, for example, in 2020, but the judgment will be rendered in 2023, I'm making this number up, July 1st, just to keep things very simple. In that case, we would need to be talking about pre-judgment interest for that period of time. And unfortunately, it's not compounding. It's simple. But if you take a simple number, a simple interest for 11 years, pretty much, it still adds up. And the question is, what rate should be applied? Generally, in the commercial matters in New York, that would be 9%. That's my understanding. However, Argentina made an argument, as far as I understand the filings, that there should be a different rate applied, which is used in administrative cases in Argentina. I don't know the exact number, but I suspect that it's a lot lower. However,
go ahead.
However, Burford, it sounds to me that the plaintiff counter-proposed or counter-argued, and the judge seems to be leaning that way, even though it's not final and not certain, that it should be a rate which is normally used in Argentina in commercial disputes.
Mm-hmm.
It would be between 6 and 8%. So the way I think about it, if you take 6 multiplied by 11 years, that's 66. And if you take 8 and multiply by 11 years, it's almost 88. So, which means that you take those numbers that Andrew mentioned, and you should be adding, if this plays out the way it seems to be going, which is not final. The judge very clearly stated that she reserves her right to change her opinion and approach here. But right now on the surface, it seems to be that we need to be increasing the amounts that Andrew mentioned by 66 to 88%, which is again several billion dollars more. On top of that, once the judgment is issued and the damages are finalized, the prejudgment interest stops, because guess what? It's called prejudgment. Now there is a judgment, so it stops. But there is also post-judgment interest, which obviously has not been decided, and it would not be decided in this trial right now. But the concept of post-judgment interest also recognizes time value of money. And the way it works is this: if a plaintiff obtains a judgment against the defendant, and defendant is not paying the money, and they will be trying to avoid collections, and they will only will pay in 5 years from now, again, the plaintiff is hurt. So to compensate the plaintiff, there is a post-judgment interest, which is generally applicable federal rate is used. And that's lower, and it fluctuates. So depending on the way at rate side, etc. But the good news is that it will not be 6 or 8, most likely. It will be probably quite a bit lower. But even 3% a year being accrued, is still something. And we'll get back to that. But also it could be probably used as a little bit of a stick in negotiations at the later.
And it'll be applied to the total award amount. So, we mentioned roughly, if it's the higher number, it's roughly $8 billion pre-judgment interest, roughly $16 billion after you include the pre-judgment interest. Well, 3% on $16 billion per year, 4%, whatever it is going to be a pretty hefty number. So it could be pretty hefty. The only thing I will add there is I talked to several people familiar with the case, experts, that type of stuff. And all of them were like 95%, yes, this is probably simple interest. But there is a small outside chance, everything's a negotiation, everything's up for argument. There is a very small outside chance that somebody convinces them that this should be compounded interest, which would obviously add even more.
I'll take that every day of the week and twice on Sunday.
Yeah, I would too. I'm just throwing out there. I mean, you are almost certainly correct, but just throwing out there that it is not, you probably don't want to bet your life on it, but you could probably come pretty
I
close.
wouldn't.
So look, if we're just taking the high end numbers, and I'm looking and I've got my spreadsheet properly adjusted. So high end numbers, $5 billion in damage, or sorry, low end numbers would be 5 billion. That would be about 2 billion to Burford if that fell through. High end numbers, 8 billion. That would be about 3.3 billion plus to Burford if it went straight through. You could basically double those numbers to account for the simple interest if you want to start doing it. So, I think one thing people might do is say, oh, Andrew and Artem have just said that there's this case. But we'll talk proceeds to Burford in a second. But one other thing, there's two risks to Burford here now. The largest risk is going to be collection risk, and we'll talk that in a second. But some people might say, hey, the final ruling isn't here yet. Argentina has a history of appealing. There is some risk Argentina wins this, gets this overturned on appeal or something. I personally think that risk is extremely low, but I don't want to put words in your mouth. I'll ask you, what are the odds Argentina pulls a rabbit out their hat, gets this overturned on appeal, and you and I look very silly in hindsight talking about this big win on the podcast?
Okay, so number one, regardless of what happens, we will not look silly for a very simple reason. We recognize that there is a risk of appeal, and we recognize that Argentina has the right to appeal, and they very well may exercise that right. My expectation that they would. So there is uncertainty, and yes, some judgments can be overturned on appeal. It happens. And by the way, there is also a possibility that even if Argentina loses appeal, they could go to an Supreme Court to take the case. The chance of that is very likely because generally the Supreme Court takes very important cases that could establish substantial legal precedent for the future, where the case law being established is so important that they feel compelled to take that case.
Yep.
In this case, with no offense to Peterson, Eaton Park, Argentina, YPF, and Burford, it's incredibly complex case for the judge to decide and rule. That's why it took a lot of time. And there was some fascinating issues about sovereign immunity invoked earlier, but that was decided a long time ago. But even that Supreme Court said, we're not going to take it.
Yep.
So I doubt that we'll make it to Supreme Court. But yes, it would probably be appealed, and there is always a chance of losing an appeal. So we need to be very cognizant of that.
So now, 100% agree with everything you're saying, but I did talk to several lawyers, and all of them said, look, Argentina has lost every decision and case in this case for 7 years. Supreme Court rejected their sovereign immunity argument, as you said. And Supreme Court did not reject the argument. They rejected to take the case. Yes, exactly. But they said, look, the judge felt comfortable doing summary judgment here. And in general, you do summary judgment because the law and merits are quite clear. If the judge felt comfortable doing summary judgment and you appeal, the law and merits, according to the judge, were quite clear, it's extremely unlikely that the judge just misinterpreted the law and merits so badly that she's going to get overturned on appeal. So I had lawyers say things like appealing a summary judgment is like throwing good money after bad. Not to say Argentina won't do it. It's a huge case, but everyone I talked to seemed extremely unlikely that anything productive for Argentina happened through appeal.
I think it's unlikely. Historically, I was saying that probably winning in summary judgment will be a big win. It's unlikely that it will be overturned on appeal, but it's possible. So I agree. My analysis is in agreement with what you just described. I agree with you. Also, let's talk about the mechanics of the appeal, because I think some people are confused about it. So let's clarify the way I understand it. Again, to be clear, I'm not a practicing lawyer, so I can be wrong. Do your own work, but this is my understanding of how the rules work. So at some point, the court will render a decision on the damages, and then both parties can appeal. Why Peterson and Eaton Park may appeal? Well, remember, they lost against YPF.
Yep.
So they have the right to appeal that part of the decision and say, we disagree. I don't know whether they will do it or not. I'm sure right now Burford and lawyers are strategizing about those things, but it's a possibility. Then about Argentina. Argentina has the right to appeal. However, in order to appeal, one of the important legal consequences of appealing as a judgment of the trial court is that it will stop collection efforts. However, there is a caveat. In order to stop collection efforts, a defendant who lost the case must post a bond.
Yep.
I would suspect that not many parties will be willing to post a bond for Argentina. because then that bond will be used to pay down if the appeal is lost.
Yep.
So if they post a bond, that's actually, in my opinion, terrific news for Burford.
That's actually, I hadn't thought of it that way, but you are 100% correct. That would be, hey, we're getting some percent of base guaranteed for sure. Let's go.
Yes. So let's assume that Argentina does not post a bond. They still have the right to appeal. However, the appeal would not stop collection efforts. In other words, Burford can immediately start working on enforcing the judgment. Okay. Now, there is a caveat. The court has the right to put a stay on enforcement, even without a bond. It happens incredibly rare. It's a very, very rare situation, but we cannot rule it out as well. So I want to mention that. But that's the mechanics of the appeal. And the time that takes appeal to go through varies. It varies from court to court. So in the US, I took the bar exam in 2005. It has been a lot of time. As you can imagine, Andrew, I was not reviewing the legal textbook recently on varieties of legal issues, only on Burford stuff. So, but my recollection is that there are 9 appellate courts in the US. And New York cases go to the 2nd appellate court. And right now, according to Burford press release, the timing of appeal is about 18 months.
Yep.
The number I had in my head was actually a little bit lower, but again, 15, 16 months. But again, that number fluctuates. It can go up and down or, or sideways. So that's on the appeal. So let's pause here. Anything else?
Okay, no, so that's great. So I think at this point we've talked likelihood of risk. We started talking a little bit about the appeal. Just so you know, everything you said on the bond and the enforcement, everything completely consistent with what I was thinking. So let's talk on the low end. Burford, without any interest, if you take the worst state for Burford, they just got a ruling that the gross ruling is $5 billion. The proceeds to them is about $2 billion. On the high end, you take the highest end number, you include the pre-judgment interest. This is over $16 billion. This is USD, right? Over $16 billion. We're talking about over $5 billion of proceeds, or roughly a little bit. Let me get my math out. Where is it? On the higher end, we're talking about over $6 billion to Burford. Burford is a $2.5 billion market cap company as we're talking today. The question and what the market's trying to assess, we can talk about business valuation, everything a second there, but everyone knows, look, Argentina is not exactly a good credit. A $16 billion judgment they do not have $16 billion. So everybody's starting to think about what is the haircut that Burford's going to need to take, either because it takes so long and they have to go seize lots of assets and sell them, or more likely them in Argentina go to a table and say, Argentina, you've got this $16 billion judgment against you. It's going to accrue. We don't want to have to start seizing your warships. We don't want to have to seize Argentina Air Force One. Argentina says, hey, we'll pay you $1 billion. We'll pay you $2 billion. We'll pay you some percentage face value. People are starting to think, what is that percent that Burford's actually going to collect? Okay,
so we'll get there in a second. This is a small proposal that I would make. So you mentioned some numbers in absolute, what Burford entitlement could be.
Yep.
Let's convert them into per share basis, because I think it will be easy for listeners to relate, because they could, look up the share price of Burford. Today, I think it's what, 11.50, 11.30, 11.60?
It's moving all the time, but it's somewhere in the mid to high 11s. Yes.
Okay. So, and based on the math, and I'm here relying on the math that Burford offered in their press release, and I converted that into the per share basis.
Yep.
So if it's only damages with the call it bad date, low value date, then it's roughly $9 per share.
Yep. 100. I got my thing here. 100% agree.
And if you take the good date, great date, bull date, let's call it, and you put damages at 8%, then we're talking about $28 and change.
Yep. That's about right to me. Yep.
Okay. So now, before we get there, and we'll get into collections, I'm not trying to avoid the question because it's a fascinating topic. There are a couple of other things. It would be reasonable to expect that Burford team would get a bonus once the money either collected, or at some point they will get maybe some intermediate steps, whatever, because that's a tremendous amount of work and tremendous, as of right now, because there is always an appeal. But as of right now, that's a tremendous step towards shareholder value creation.
Yep.
So it's reasonable to expect that there will be some money, substantial amount of money paid to employees, to the management team as a bonus. We don't know what the number would be. I would speculate probably between 5 and 10%, maybe 4 to 10. So that will be my guesses.
So I have talked a little bit about this. If you go back to their old annual reports, they disclose the employee incentive fees by vintage. And when the YPF case was kind of made, I believe the vintage employee performance fee, incentive fee, whatever you want to call it, was 4%. So 4% is kind of what I've been nudged to. Maybe it's a little higher because look, if you won a $16 billion award and you said this was a grand slam out of the park, I wouldn't be surprised if you were buying an extra watch or two for your employees, that thing. But so far I've been guided to 4%. And that's kind of how I've been thinking about it. Not to say it's right or wrong, just that's what I've been using.
So that's fine. Again, I said 5 to 10, mentioned that 4 because I think I also have that number in the back of my mind. So it could be 4. It's that range. But remember, you need to account for that. So, and then there is more substantial and interesting question, in my opinion, is will this giant amount of money be taxed?
Yep.
And at what rate? So the worst case, you take, okay, couple of things. You need to remember that Burfurd is an international company. It's incorporated under the laws of Guernsey, if I'm not mistaken.
Yep.
And based on everything what I know about Burfurd, they structure things well. Also, another thing to disclose, in my prior life before going into business school at Stanford,
you were in taxes, right? Yeah.
I was an international tax lawyer. So my expectation right now, and remember, here I am sharing educated guesses, because without being inside the company, ideally in their tax department, I would never know how exactly they do these things, right? It's impossible. So I can only be guessing here. So my suspicion right now, the taxes will be next to zero. I know that some people are kind of taxing it at mid-teens rate because Burford said publicly that over time, our rate would go to mid-teens. Yep. Maybe they're conservative, maybe not. Time will tell.
I believe it's low teens from their 20F, and I've been told low teens.
They started at mid-teens.
Yeah.
Some time ago, they said, "Oh, it's very low rate right now, but we'll go to mid-teens," and then I think they dropped it to low teens, if I'm not mistaken.
Okay.
So, but I think Peterson, as a case of earlier vintage, we're talking about 2015 vintage. I actually suspect that the taxation would be next to nothing. But again, I don't know. I'm just looking at their history, their commentary, and trying to figure out what's really happening.
You know, I think there's a very good chance you're correct. I do think ultimately the haircut that they take actually is going to matter more than kind of the tax rate and the employee's claims. But obviously, 20% of
20%.
I agree.
Federal.
But I completely agree with everything you said. And then the other thing you said, I don't know a lot. These are informed judgments. You know who knows? Absolutely no one, because this is going to be a $5 billion, $6 billion, whatever, $2 billion, whatever it is award. Burford's not even going to know until they file their taxes with the U.S. government, and then the U.S. government file their taxes with Guernsey, and then everybody comes after and says, yeah, this is good or not. Like, you don't know, because these are huge, huge claims. Like, people are going to take a look at a $2 billion cash inflow.
Okay, so look, now I'm really getting into complex things. So yeah, that's risky. Okay, so generally Burford structures, okay, and also Peterson is very unique, right? And remember, Peterson estate is in Spain, right? Yep. Guernsey parent company is in Guernsey.
Yep.
Then they have some subsidiaries, either direct or indirect, in the US. And by the way, probably plenty of other locations in UK. They recently opened Dubai office. They got something going in Asia, etc. So it's a complex thing, right? So the situation is this. With Eden Park, look, okay, I think those things will either be classified as interest income or they will be classified as other income.
Mm-hmm.
And the other income, oh boy. I want to...
You know what, I think
I'm trying to remember exact sections of the code. Yeah. So look, but the bottom line is that it's a range. We don't know. The bull case is that it's 0. The bear case is 21, right?
Yep.
That's how I think about it. But again, we will see.
So 100% agree. Let's turn to, I think, the most pressing question. Burford says in their press release, hey, we can either try to enforce, and we can talk enforcement strategies. I think Burford's well situated to enforce and know what the cost and likely outcome is. We can try to enforce, or we can negotiate an upfront settlement, guaranteed money, but it's either substantial. If we take the upfront and we negotiate a settlement, it's either says substantial or significant, but it says it will be at a substantial discount if we take an upfront payment from Argentina, basically. So, that $8 billion, $5 billion, $10 billion, whatever number it is, everyone's wondering, how much do you haircut it for whatever a substantial discount or settlement would be? So how do you think about, if they call it $10 billion to make the math really easy, what type of discount are they looking at? What type of cash flow is actually going to come into the company?
I think it depends on when, first of all, if that happens, right? But it also depends on when it happens. For example, if Argentina comes and says, Burford, let's make peace. Let's do a settlement tomorrow, even before the trial court renders a decision on damages.
Yep.
There's a lot more negotiation room because there is a lot more uncertainty. What if the judge thinks that it's a bear date, not a bull date, right? That's one. Number two, let's say those negotiations, it's called post-judgment settlement. Let's say it happens after the decision is made on damages, but before the appeal. There is still some uncertainty on appeal, as you and I discussed, even if it's low, and here we're talking about billions of dollars, then the discount should be bigger. If it's after appeal, then the discount will be shrinking. Because at that point, and again, assume that Supreme Court says, no, we're not taking this case. Because at that point, there is zero legal obstacles to the entitlement. There is only practical obstacles of collection efforts and enforcement.
Yep.
And those, in my opinion, will bring a lot lower discount. So let's go and say, okay, Argentina does nothing to try to settle the case until Supreme Court says, no, we're not taking this case. So what discount will be there? Remember, I don't know, nobody knows, including Burfurd right now doesn't know, and Argentina doesn't know. And we don't have a very big sample size of prior cases because number one, judgment of that nature are rare. Number two, very often their terms will be not disclosed. So it's not like we can go get a full data set and say, hey, this is the median, this is the average, this is two standard deviations to the left or to the right. So I don't know. If I were to guess, I would say between 35 and 55%. That will be a discount. So call it, the collection would be anywhere between 45 to 65 cents on the dollar. That would be my guess.
And however, that's what you're saying. If Argentina takes it all the way to every appeal is done, Supreme Court's rejected this, but basically it's up to the step where Burford's just trying to seize airplanes, warships, whatever they can to get paid. That's kind of where you would think the discount comes in at.
So that's my guess right now. And this is another case. It's to be clear, when I talk about, for example, the tax rate, I have some experience and some knowledge of the industry and the rules.
Yep.
I don't know the internal facts, obviously, because they don't disclose it in their filings. However, in this case, when we talk about the settlement, I am a lot more guessing than on other matters. For example, when we were discussing foreign currency, I had a very strong view.
Yep.
Here, your guess is as good as mine, right? So, but now let's talk also about the structure of the settlement, because here's the thing. If Argentina comes and says, listen, we owe you 10 billion, we pay you right now 4.5 and we're done. That's one situation. In another situation, Burford, we don't have even 3 billion to give you right now. How about we give you $1 billion and then we'll be paying you 500 million for the next 10 years, right? That's a different situation. And in dollar amounts, it will be larger than upfront payment. So
I was just looking
a lot of structuring here.
People can Google. So if you look up international settlements and all of this sort of stuff, like every book will say, hey, there aren't tons of them, but there are, in the dozens of cases, and like half of them involve Argentina historically. And when I was prepping for this podcast and doing work on Burfurd, one of the funniest things is last year, there's very similar to what you just said. A group called the Paris Club met and negotiated a payment plan with Argentina. But what they were negotiating was they were renegotiating the last negotiation they had to renegotiate Argentina's plan, because Argentina defaulted, then defaulted on the next plan and was getting ready to default on this plan. So Argentina and settlers are very familiar with the type of overtime payout, negotiations, all that type of stuff.
Okay, so a couple of important things here. Number one, Paris Club is, I believe, this is a group of major developed countries.
Yes, yes.
This is not a private organization. This is not a commercial consortium of hedge funds or investment banks.
Correct. It's Germany and a few, yeah.
Exactly. Germany, US, probably some other countries. Again, I don't remember the whole list. So they make decisions together, whether it's consensus or by vote, I don't know. But it's a group decision making where incentives vary. And also it's a group of countries. And there is a lot of international politics involved there. And different countries may have different incentives. I'm making this numbers up, situation up. One country in continental Europe may be saying, we want to have good relations with Argentina, we'll try to be more lenient. Another country may be saying, we don't really care about Argentina, our trade with them is very, very small, but we want better settlements, right? So it's a different situation. And similar, when a sovereign nation defaults on a sovereign bond that is typically governed by the laws of New York or the laws of England, there is a default. There is a trustee, the bond trustee, who will be acting to enforce it. But the trustee typically acts based on the vote of the majority of the bondholders.
Yep.
I'm grossly oversimplifying here the way sovereign is structured as well. Massively oversimplifying. So don't try to buy bonds of any sovereign nation based on this 30-second summary. And those investors vote based on the amount of percent of notional amount of the bond they have. Okay. And different bonds have different bond trustees. Or at least it can be the same entity, but the voting and instructions will be different. And as you can imagine, people or institutions that own those bonds have different incentives. Someone bought them at 100 and rode all the way to, I don't know, 15 or 20, 25, depends on the particular nation. And someone can be a hedge fund that bought them at 12 cents on the dollar. And they're like, hey, we'll settle at 27 in a year.
Beautiful.
With 105 IRR, we'll get paid out 2 and 20. That's terrific. So it's very, very different. And a lot of negotiation happens not only with the debtor, which is the country, but also within the group.
Yep.
All of this has virtually nothing to do with enforcing the judgment. In the situation of a judgment, there is one defendant and there is one plaintiff. Again, here we have two plaintiffs, there will be two separate judgments, blah, 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 right? So, and then you go and you enforce that. You don't need to consult with a trustee. You don't need to get a vote. You don't do that. So to me, all those parallels about bond restructurings are a very bad analogy. There is no better analogy, or almost no better analogy, but it's still a bad analogy. Because the playing field here is radically different. It's like the same as you try to go to England and you try to use the rules of football here in the US to understand the Chelsea versus Manchester United game at Trafford Field, right? It's not going to help you. It's different. They also have the ball and people running, but it's a different game. So here's the same. So I think one of huge misunderstandings about Burford and YPF has historically been this. I've heard this from a number of people who some of them are very smart, some, not as smart, but many are very, very smart. And they will be saying, Artem, sovereign bonds of Argentina are trading at, whatever they would trade.
25 cents on the dollar. Yep.
Right now, 25. At some point, they were probably 50 or 60 or whatever. Hey, so this whole thing, Peterson, should be haircut. I'm like, no, it's totally different. Remember, Burford has always an option not to settle for anything and make the life of the debtor hell. Whether it's a smart strategy financially, it's a separate conversation, right? But they do not need to settle on the same terms that bondholders did. They don't have to.
No, it's a great point. And I think, to your point, one plaintiff, one defendant. If Argentina doesn't hit do this settlement, like they're just like kind of spitting their nose at the U.S. courts and particularly the New York Fed court circuit. Like that's the New York Fed circuit might, Burford, one plaintiff, one defendant, they can just go to the New York Fed and say, hey, we've got this judgment outstanding. Argentina refused to pay. $5 million just popped up into their bank account. We want to seize it. And the New York Fed says, these guys are giving us the finger. Absolutely. Frozen, seize, like they can go like that, just seizing assets. That takes us well into the next thing. One thing I think it's easy to forget about, but Burford is, at core, they're a big group of lawyers. They have an asset recovery business. They've never had an asset recovery like this, but these guys actually own an asset recovery business. Like these guys are very well equipped. If they do the math and they sit down and say, Argentina is offering us 30 cents on the dollar. We think we can get 35 cents on the dollar by going and seizing things. And obviously we need to discount that back for uncertainty and time and everything. They're very well equipped to make that decision and go execute that decision. So I just want to pause there and talk about anything on the Burford asset recovery side that you want to talk about.
Okay, so broadly speaking, and this is oversimplifying, many people, I think, are doing the wrong analysis here. They're thinking about like, oh, how many assets Argentina has around the world, outside of Argentina, which can be taken over. And also, let's explain to the listeners. In Washington, D.C., Argentina has an embassy. I got no clue whether they own that building or not, or whether they listen, I don't know. But let's assume that they own the building. Can you take over the building? The answer is no. Why? Because that building is owned by sovereign nation for the purposes of conducting its activities as a sovereign nation.
Yep.
What you can only take over is the assets being used in commercial activities. So oversimplistically, if Argentina owns a vessel which is used for commercial activities, let's say transport oil. Again, I'm making this up completely just to illustrate the point. That can be arrested in a court in any place in the world that would be recognizing judgments rendered by US courts, which is, by the way, good news. Plenty of countries do that. So, and many people, this is where I think many people are wrong. They're doing analysis like, oh, let's say $10 billion judgment. It's a lot of money. Does the Argentina have enough property that can be taken over around the world? And then they start counting like, oh, one vessel, 2 planes, this, and like, it's not that much money, right? Sure, it's one of the strategy. And if you collect, $10 million there, $20 million there, over time it's would done. However, there is another important, the second important lever and avenue, which is we can do something which may not bring us tremendous monetary benefits, but that would make a life of a sovereign nation that is a party to active international trade and relations very challenging. It's like, imagine, Andrew, you have only one bank account. Okay, let's not use you as an example. That's a bad idea. Imagine John, random guy John, has only one bank account, only one. And he has only $100 there. And there is a judgment against John, and that bank account is effectively taken over. John losing only $100, which is not a big deal. However, living in the modern world without having a bank account, without using credit cards, and then your Venmo is linked to your debit card and your PayPal linked to debit card, etc., that's kind of challenging. Like your app store payments will not work, etc. That's, in my opinion, a lot more promising venue of enforcing, where effectively, sure, we only got a little bit of money out of these activities, using our friend John is $100 only, but now John has all the incentives to come back to the negotiation table and say, okay, uncle, let's sit down and figure something out.
Exactly. So, I mean, I think the way it was described to me, and I'm no international settlements expert, but exactly what you're saying, like, look, Burford can basically, Argentina has shown an increasing commitment. They want to be part of the international financial system, the international order. If this judgment is outstanding and they're refusing to pay it, Burford can basically, as you're saying, freeze their bank accounts. And if Argentina ever wants to access the international financial system, they're going to have to deal with Burford at some point.
They will have to. It will not disappear, right? Like, it will not disappear. You need to deal with it. And also importantly, and this is an area where I have very little handle on, it also depends on the situation in the internal politics of Argentina. Which administration is that, what their plan, etc., right? So I think elections in Argentina are coming up not too far from now. Yep. And I don't know what happens. Again, I don't follow Argentinian politics. We have enough in the US to follow. So I don't know how it will play out, but it's also a factor. It's at this point, if before we were purely in the legal end, what the law, what the facts, what the applicable precedents, etc. Now we're also in the world after the summary judgment is rendered, and after at some point damages are determined and appeal is behind us, etc. We're also in the practical world, and there are many variables and many people, many stakeholders with varying interests.
And now a quick word from our sponsor. Are traditional expert calls in the investment world becoming obsolete? According to Stream, they are, and you can access primary research easily and efficiently through their platform. With Stream, you'll have the right insights at your fingertips to make the best investment decisions. They offer a vast library of over 26,000 expert transcripts powered by AI search technology. Plus, they provide competitive rates on expert call services, and you can even have an experienced buy-side analyst conduct the calls for you. But that's not all. Stream also provides the ability to engage with experts one-on-one and get your calls transcribed free of charge, all for 40% less than you would pay for 20 calls in a traditional expert network model. So if you're looking to optimize your research process and increase ROI on investment research spend, Stream has the solution for you. Head over to their website at streamrg.com to learn more. Thanks for listening, and we'll catch you next time. So if I just did the math here, so if I take some of the numbers we threw out, right, about a $10 billion award, I've been using 17.5% discount. A $10 billion award, you said maybe 45 to 65% of the award value is what they get. And I've been using 17.5% to cover taxes and the bonus payments to employees. We can adjust that. But if I just threw all of that into my little spreadsheet, at about half a face, we'd be talking about somewhere in the $7 to $8 per share of cash flow coming into Burford. Burford's an $11 stock right now. I guess the two questions I'm trying to go to are, if they get $7 to $8 per share, or $20 per share, or $5 per share, what do you think they do with the cash? And then I quickly want to talk about the remaining Burford business before we wrap this up.
Look, I don't know, because there is no clear statements coming from the company about the use of the proceeds. And which makes sense, because why they would be talking about using the proceeds? Enough naysayers, as we discussed, were saying Peterson is zero, they will never win, they will get paid in pesos, they will never enforce it, etc. It's very logical for management not to be talking about, this is our capital allocation plan once we get many billions of dollars, right? So it makes sense. Plus, let's be superstitious a little bit on this issue. Let's not talk about it. It's like, I don't know whether it's superstitious, by the way, but it makes sense to me. So now let's say, and also remember, if they got $3 billion upfront right away, it's one story. If they got $10 billion, but over 10 years, that's another story, right? So now there are a few things. Burford said publicly that they plan to deprioritize their asset management business, meaning they will not, this is the way I read it, interpret this, the management is unlikely to raise more funds for capital for core litigation finance strategy. This is the one that makes more money, okay? Remember, several years ago, management was saying we are capital constrained. That's why we figure out another way to get more capital without diluting shareholders is to manage third-party funds. And then we allocate and we co-invest. 25% goes from balance sheet, 25% goes from funds, and 50% goes from sovereign wealth fund, which they also raise. They have great terms like 0 and 40. If any hedge fund manager will be jealous of those fees. So then over time, they changed that formula, made it more 50-50, then they changed it again. But there is a formula, so everybody's treated fairly, and it's set up in advance, and everybody signs up. So given that the management is saying, listen, we want to deprioritize third-party management business, it means to me that most likely they expect a lot of recoveries, which they said publicly about their model from their core business. And I also think that if they get paid on YPF, and when they get paid on YPF, some of that cash will just go to their core business.
Yep.
And given the historical IRR of 24% on the core cases, normalized ROE, I think, is 20% plus. That's a pretty good idea to do. Now, remember that unlike a hedge fund that invests in Facebook, and if there's a $10 billion hedge fund invested in Facebook and Amazon, and tomorrow they get another 10, they can just go buy more Amazon and Facebook. In Burford, in litigation finance management, in litigation finance business, it's different. You cannot just go and say, hey, I like that case, I want to put 20 more million or 50 more million, right? You need more cases.
Yep.
Some of those cases may be on similar or even the same legal theory, sure, but you cannot just pile money. So there are some limits on how much you can deploy. Plus, their core business, in my opinion, is doing very well. We'll talk about it. So expect some return of capital to shareholders, either buyback or dividends. If I were to guess, I would guess on dividends. I would not guess on buyback. But that's personal opinion, which is not informed by anything. And the reason why I think it probably will not be a buyback, because once they start getting money, it's very possible that the multiple will be very different from what it is today.
I think I agree with everything you just said. I do agree. I think once the money hits the account, I think the share price is different and the multiple is different. The only thing I would add there, I think if you listen to their recent calls and having talked to them a little bit, I think if the stock price stayed here and they got 500 million in cash or something come in, I think they would be very interested in doing buybacks. I think all else equal, they would lean dividends, but I think they even said in their recent calls, we think the stock's undervalued. They've talked about the value of the thing. I think if it came to it and they could buy back 300 million of shares at this price, I think they'd love to. But I do think if they're like,
I think in this scenario, you're right. In this scenario, the way you described, Andrew, we're on the same page. I'm in agreement with you.
If you and I were having a conversation, we were like, oh, we think the stock is at 90% of fair value. It'd be great if they would buy back shares. I think they're going to lean dividends there. It's only if it's massively undervalued, I think they're going to lean buybacks. Before we talk about core business and probably a little bit on the SEC fair value discussion, just one, I believe they cannot monetize all of their Eden Park stake if they want to, and they can still monetize 10 or 20% of their Peterson stake. Do you think they're going to look to monetize a piece of their stake on the heels of the summary judgment win just to realize value, get some more cash in the door, maybe get a mark on the remaining shares?
Okay, so it's possible. Let me just, for those who may not be familiar, who are not Burford junkies and Burford nerds, I think nerds is better term than junkie. Yeah, I think so. Burford nerds.
Yeah, you're probably right. You're probably right.
So let's clarify. When I say clarify, I will just explain the background. So we discussed that Burford has entitlement of less than 100% on Peterson. They have 75% of Eden Park, so they can sell bits and pieces. And again, it's like waterfall. In case of Peterson, it's like 61.5% of the gross, let's call it. So they can they can bring it down to 50. Below 50, they cannot take it. While in Eden Park, they can sell anything and everything, and so far they haven't sold anything. And Burford has a history of selling those things. And the last time the sale was done was in July 2019, when the Supreme Court rejected, but the Supreme Court said, we're not going to take the case to hear the case based on sovereign immunity argument. So then immediately, literally, I feel like within 48 hours, the sale was announced, which makes me think that the sale was already prearranged and parties involved were only waiting for the Supreme Court to reject it, and then they signed the deal, wired the money, closed the deal, done, right? So, and that was done at $1 billion valuation.
Yep.
It's $1 billion valuation, and Burford sold like 10% and got 100 million. But remember, this is not from the number that you will be seeing in the court decision. It's a number below, which is only Burford entitlement.
Yep.
So it's a good valuation.
And if anyone's looking at Burford's balance sheet, this is roughly the value that YPF has held on their balance sheet. They have added some legal expenses that have been ongoing, but this is roughly where it's marked on their balance sheet and everything. That June or July 2019 sales date is where it's marked at, just for anybody who's wondering how it's on the balance sheet and everything.
Yes. So now, and subsequently, And Burford for a long time never disclosed the mark on Peterson on YPF. And the logic was that, listen, it could break confidentiality rules, it could work at only product rules, so we're not doing that. And then after Muddy Waters' report, which was largely based, there were like 8 or 9 core points, and one of them involved the accounting and fair value adjustments that are very sizable at the time. Burford actually released the exact mark on YPF, and they showed that their other fair value adjustments are incredibly small. So like not even worth talking about.
Yep.
And the question becomes, okay, Artem, didn't you just tell me that they didn't do it before because of legal limitations and now they did it? This is how they did it. They said, listen, we will mark YPF not based on our internal valuation, based on the case progress. We're going to mark it based on the valuation that was obtained in an arm's length transaction on a big amount. 100 million is a lot of money, unrelated parties, blah, blah, blah. Let's do it. One of the parties, I believe, was actually, I'm not sure, but I think was one of the funds they managed, but I can be mistaken about that. So, but if it was enough unrelated people, that's the mark. Auditor said, we like it, signed off, done. And that way, Burford satisfied investors without putting in danger any confidentiality things.
Mm-hmm.
So now, Burford, and we should probably also talk about the new accounting thing. Burford now will probably be in front of this decision. Okay, so first of all, the summary judgment was rendered on March 31st.
Yep.
Water ends on March 31st at midnight. It means that Burford will need to mark up, in my opinion, based on I don't know the internal models, but I suspect that summary judgment is a pretty big milestone to change the valuation. And they will need to do it. And by the way, Burford will start reporting quarterly for the first time this year.
Yep.
So they will need to do it. And then the question becomes, okay, we mark it up, and then all the investors will be coming to us and saying, so where is it marked? And by the way, did you mark other cases as well, only YPF, or what's happening? And in this situation, Burford cannot, in my opinion, cannot tell you where the mark is. However, if they sell small but sizable piece, where they say, listen, we made a sell at, I'm making these numbers up, at 5 billion valuation, that's where we're going to market right now without disclosing anything and any of our views about the future litigation, that's a win. So will they monetize or not? I don't know, but I think there are a lot of reasons to do so. Number one, it's accounting. So satisfy investors. In my opinion, that should be least of an issue, but it could be a reason. More important reason is to show that the market, and I don't talk right now about stock market, I'm talking about sophisticated hedge funds who invest in these type of claims, valued it substantially higher than in 2019 and recognize the importance of summary judgment. So that's so, and put a mark. So that's another reason. Plus you get cash, and then maybe you pay special dividend, or maybe you do share buyback, as Andrew you was saying, if share price stays, at some level that management views as very undervalued.
Yeah, no, I think all of that was right. I just think even if you're wildly bullish on this, like, if you sell 5% of your remaining claim and take in 100 million, 50, whatever the number is going to be, your market cap's 2.6 billion. Like, I just think getting a little diversity, getting a little diversification, getting a little bit of the cash in the door, obviously don't sell it for a song, but getting that mark, being able to prove that, I think that's pretty important. We've been running really long, but I do.
Also, Andrew, you're 100% correct. Burford sold Peterson's stake several times.
Yep.
The big reason for that was for diversification.
Yep.
Because Peterson, it's a great problem to have. It's like, imagine you invested in Monster
Facebook
right?
when it started up, right? Yep.
Or if you're a private investor, invested in Facebook when it was 10 million valuation, right? At seed round or whatever it was. So they kept trimming, and that makes sense. Yep. So I would not be surprised that based on the same rationale, they will do another trim decision. I would not be surprised.
And for them, they also were able to use those early sales to fund their core business, which obviously this claim has done better than their core business, but their core business, 20, 30, 40, 50% IRRs ain't too shabby either. We've been running long, but I do quickly want to go through two things. The other big thing that are on people's minds that caused a little bit of a sell-off before the YPF. Yeah, go ahead.
Okay, there is another thing which I think is fascinating. And I haven't seen anybody writing about it, talking about this. Okay. As we discussed, Burford only has entitlement to a part of the claim in both cases. Okay. Question. How are the parties going to be collecting their own piece of the award? I think it's highly likely that those parties will come to Burford and say, Burford, you will be collecting for yourself. Can we make a deal that you will help us with collection, like pari passu?
Oh, interesting.
And then we will pay you. So I actually think, as funny as it sounds, Burford will keep making more money.
You know,
asset recovery here.
That's interesting. I don't know. I've never asked and never thought if they, when they sold the stakes, if they agreed to cover that. You're probably right. Why would you cover that? I don't know, because I think part of it is the people they sold to agreed to follow Burford. I'm going to put that on my follow-ups. That's a really interesting question. That would be pretty crazy if they were getting, because asset recovery fees on this would be pretty huge.
So look, there are several situations here, and they're different. So let's start with Peterson. Peterson is state.
Yep.
That's one party.
Yep.
And I would be shocked if Burford is obligated to help them with collections. Like, I would be shocked. Then there is a consortium of investors who invested, I assume it's some sort of SPV, where Burford owns its percentage, 61.5, I believe, and the rest is owned by outside parties. It's more possible, but I still will be surprised that Burford is obligated to pay enforcement. Even if it's forced to pay, it will be paying, like, more likely, I think, it will be the SPV that will be paying Burford, big Burford, some recovery fees, and effectively 61.5% will be taking money from your left pocket, putting it into the right, but the rest will be income, in my opinion. Again, I haven't seen those agreements. They're confidential. The Burford never filed them. So I'm purely speculating here. But my point is that I don't think the investors who invested will piggyback and get a free ride here. Like, I don't think so.
As you say it, I think you're right. I'm sure it's agreed that it has to be arm's length, but I think you're going to be right. Anyway, but we do need to. There's two more things.
I'm sorry.
Oh, Artem.
And I believe that one of the funds managed by Burford also owns a piece of Peterson. I
think that is correct.
So there will be, I assume that there will be also an incentive fee on another piece at some point. So yeah. So long story short, Peterson win is pretty nice.
Let's quickly talk. Look, earlier this month, they report earnings. I thought earnings were great. We can very quickly talk core business a second. But the thing that caught everyone's eye is they said, hey, we can't file our financials currently. It is not an SEC investigation. They would be very bad if you called an SEC investigation, but they are having discussions with the SEC over their fair value reporting of all of these legal claims and assets that they own. And because of this, they can't file their 20F, their reporting's delayed. They think it's going to be resolved in the near term, but they can't make any promises because you're dealing with a government agency. It's complex accounting. What are your thoughts on this SEC fair value discussion they're having?
In my opinion, that's a lot of noise. And I think, so number one, given the history of Burford and how they reacted when there was a short report published in August 2019, and I went, as you know, Andrew, I went through point by point and published— I'll
include a link in the show notes. We talked about it extensively on the last, absolutely.
And published a very lengthy rebuttal why I disagree. Looking back, many of those points played out in a way that short seller did not envision. For example, there was a particular recovery case against Akhmedov. It's the case called Akhmedov, and the short seller was making an argument that Burford actually going to lose money. As far as I remember, they will not be able to collect, and also they're being countersued by the person from whom they're trying to take assets over, and eventually Burford got paid. So there are other examples like that. So I think Burford by now, in my eyes, always had and now continues to have a very high credibility. So if they say this is a normal discussion, I tend to believe them until proven otherwise. Now, I also believe that unfortunately this is noise, because even once some methodology which is different is established by the SEC, I still think most people will be looking and ignoring unrealized gains until they realize. because there is a lot of discretion. So I don't think people will be like, oh my God, SEC blessed this methodology. It must be great. So that's why I know that it's not possible to do under the accounting rules. But if Burford was simply reporting the historical cost and then only reporting when it's realized, I think investors would be a lot more lenient and not obsessed about fair value accounting. That's what I think. I think investors got such a big dose of rightful skepticism about fair value accounting based on their own days that post-traumatic syndrome is still with investors.
100% agree.
And I cannot blame none of us for that. Like, a cat that sits on the hot stove once will never sit on the hot stove again, but it will not sit on the cold stove either. So that's a little bit like that. So I think it's a lot of noise. I think it will be resolved. And remember, the language, there were two things happen, right? So first, one of the analysts in the question asked about, so when the SEC investigation, Burford never said the word investigation. And that's number one. Number two, Burford, go read press release on Peterson win published on April 2nd. There will be a half a page, which sounds like the most pessimistic language in the world. There will be appeal, there will be collection risk, there will be this, there will be that, Supreme Court may take the case. So you read it like, oh my God, that's all horrible. And to be clear, the management team, they just had the biggest victory in years, right? They did the same in their press release update about Q4 results, where being lawyers, they put this massive disclaimer saying, we will try our best to find financials, but we cannot guarantee that we will. And if we will not, then it can be in default. And then we have 60 days, I believe, to cure default. And if we don't cure, the default can make all that due and payable and blah, blah. And like, oh my God.
The way someone put it to me is they're like, look, normally when you deal with the company, the CEO is always bullish and the CEO always wants to sound optimistic. And it's kind of the general counsel that's pulling them back and being like, hey, here's all this cautionary language. Here's why you shouldn't give 7-year out projections and stuff. And what you have to remember about Burford is the CEO here used to be the general counsel of Time Warner Cable. Like, this is a man who is a general counsel. He is a lawyer. So when he goes out, he's going to caveat everything. He never wants to he never wants to be the most bullish person on the thing. He's talking like a lawyer would. And investors might not quite be used to that in a CEO who's generally kind of going to lean more on the bullish side and not the exception side. Anyway, Artem, this has been fantastic. We have run very long. I did want to talk a little bit about the business. I'll let you go. But I just want to say,
you want to talk about the business. Okay, let's talk about the business.
Well, I was going to say the business is doing very well. We covered the business pretty extensively in our prior podcast. If you want to do a minute on the business, we can, but then I'm really going to have to hop.
Okay, so this is the important thing. In the same release where Burford announced that they are looking into a new methodology to value their assets, they shared information about 4 cases that are either final and they've been resolved or they're almost there. Yep. And they all happened in the first 75 days of 74, 73, 75 days of 2023. And those are all substantial wins or almost wins.
Yep.
One was a settlement that was paid to entire group of 90 million. I don't know how much of that goes to Burford. It's not disclosed. I suspect that it's anywhere between 25 and 50%. And then there was a trial. If paid in full, it hasn't been paid in full, but if paid in full, it will be 67 million. Then there was arbitration award. Arbitration award only goes to funds that Burford manages. But Burford will earn an incentive fee, I assume, on that. And then there was another case for 400 million. That's a pretty nice big case. Again, it was not disclosed how much Burford has, but if I were to guess, I would say 25%. Because that used to be a formula for a long time, 25, 25, 50. Then they changed it. But I guess it's an older case. But again, I can be wrong. I'm just explaining my logic here. You can adjust my assumptions. So if you put those things together, and then apply my 25% assumption where appropriate, it means that Burford should be getting cash proceeds of 139 million.
Yep.
But that's proceeds. That's not gains or revenue. Remember, Burford puts only gains as their revenue line item. But here's the interesting thing. If you take ROIC of 68% and you try to say, let's assume this cases got resolved with average ROIC, which by the way is a big assumption. It can be low, it can be higher. we don't know, then it means that Burford should probably be reporting gains of 82.9 million in the first quarter alone. For comparison, the first half 2021 revenue was 81 million, second half 2021 revenue was 52, and first half 2022 was 79.9. So that's a big number in one quarter. And they also give a lot of leading indicators, such as like 30 final trials being scheduled, which is great, like leading metric. So I think the business is finally accelerating after COVID, because COVID really put on pause many things. And now we're having this acceleration. So I think when you and I were talking back in, I think it was November 2021, if I'm not mistaken. I had long hair. I remember that. So I think
it was July because I was about to go to Spain. No, I hear you. But Artem, unfortunately, we've run so far over. I really have to hop. But this has been fantastic. You know what? Once we get a settlement or something, maybe we'll have to come on and do a third podcast, because the Burford business, we didn't give it a lot of play here. But as you were saying, it's accelerating. It's really interesting. I think it kind of covers all of today's share price, and maybe you get YPF for free, but people can go listen to the first podcast. Artem, this has been great. I'll include your link to the Muddy Waters defense that you published a few years ago in the show notes if anybody wants to refresh on that. And looking forward to having you on again.
Sounds good.
Talk to you, man.
Bye, Andrew.
A quick disclaimer: nothing on this podcast should be considered investment advice. Guests or the hosts may have positions in any of the stocks mentioned during this podcast. Please do your own work and consult a financial advisor. Thanks.